All right, very quickly, let's conduct this part-time market analysis, looking into a few pairs and trying to decide on which directional buyers will be paying attention. Remember, it's the part-time live trading session, so we are just going to be looking into the very long term of a few pairs. Okay, those ones that we are anticipating possible price action that are familiar to us. Okay, all right, let's get going. The first one is the euro against the American dollar. This is the daily time frame. The euro against the American dollar is sitting above resistance. Okay, it's sitting above that flat bottom former support, which acted as was supposed to act as resistance, but the euro against the American dollar right now is sitting above that level. We might have seen possible price reaction from this ugly trend line. That trend line where that's the focal point, bounce there, then possible reaction at that particular point. Well, this is not really strong enough in my view. We'll just keep this one, keep it that way. But we know that this reaction here is due to that trend line, that line right there. Okay. All right. So what I'm expecting for tomorrow in the euro against the American dollar is price bouncing off around these two key levels around here, the 1.1500 between the 1.1500 level and the 1.1460 level. Okay, between that area there, I'm expecting price to make a little push, then from there on a continuation move. It is still too risky to go short in the euro against the American dollar just around that area. It is still too risky. You need to be extremely careful clicking on your sell button. In my view, this pair is struggling to make a turn to the upside. All right, in the 4 hours time frame, this is the rising trend line. That is it there. Let me keep this line in the daily time frame. Okay, so if price makes a dive to that zone, that is the possible area we might be seeing a push to the upside. Remember, we have an uptrend line already. So right here, I'm expecting price to make some reactions from here. I am still bullish with the euro against the American dollar. Okay, now the next one is the New Zealand dollar against the American dollar. Well, nice reaction of that trend line. Nice reaction of that trend line as a counter trend, a counter resist, sorry, a confluence point of resistance. Those previous levels of support here coming together with that trend line. We saw that reaction for today. Well, I was not interested in this trade. Okay, I was waiting for the first red candle to close, and as you can see here, the first red candle is a big bar eating into the 50% of this original push, of that push there, eating into the 50% zone. I don't like trading that. That's not we don't really like it when price eats too much. That red candle eats too much. It would have been better if Highland S, you're welcome. It would have been better if we had seen the small red candle around there. That would have been very good for us to click on our sell button. But the red candle is went too far. Okay, and this is a risky zone for you to click on your sell button in the New Zealand dollar against the American dollar. So I have marked two levels here between this level and this one here. That's between the 0.6630 and the 0.66 level. Between these two levels, okay, that area is just too risky to hit on your sell button. That point, I'm actually expecting that we might see price hitting that zone back up. Okay, so if you went short based on that reversal, please cash out about 80% of your profit. All right, cash it out right now. Remove your stop loss to break even. You can leave the remaining 20% running, but hey, we are not going short at that particular area. I was following this pair, this setup with the 3 SMA trading strategy because I found that as the most reliable. And if that was a triangle formation or even a range, the red candle went too far. Again, I repeat, it went too far, so I am not interested. Okay, not interested. Too risky to go short at that particular level. Rather, I will be waiting around in the forward time frame. That was the key level of support, the neckline of that shoulder, head, shoulder. Okay, that was the neckline. If you remember, we analyzed that. That was the breakout pullback, then continuation move, and of course, it seems the price has hit the first target of that reversal formation. If you project to the upside, price should have completed that journey. So right now, price is coming back again to that very key level of support, that area. It's a zone you should not be hitting on your sell button against. You don't want to click sell against that level. If at all you want to short this pair, you want price to go below that level, the 0.6609 level. You want price to go below that level, then from here on you can search for your short opportunities. And of course, you want the daily candle to close below that level. Okay, but for now, this is a critical decision making area. Price is likely to move back up, and if it does, we'll be having a new trend formation where we have that overall swing to the upside, coming back down to resume another swing to the upside. That's how trends are usually formed. So let's see what's going to happen around this area for tomorrow. It's common among the American dollar pairs. All right, that pullback that happened today is common among American dollar pairs. We have seen that in the euro against the American dollar. We have also seen that in the New Zealand dollar against the American dollar. So around this zone, be careful. All right, the sterling pounds against the American dollar. This is again another one, similar price behavior. That was the reversal there, a low quality one, but performed actually. We talked about that, but I didn't trade these reversals. Okay. Because prices are dealing around long-term levels of support, so I was not ready to go short around those zones. Again, the sterling pounds against the New Zealand dollar, you have to be careful around the 1.2796, between the 1.2796 and the 1.2778 area. Okay, those areas you need to be careful around here. Don't be surprised to see an immediate bounce to the upside. I didn't take this. I'm not going short here. Hello, Exam. Welcome to this live session. Okay, euro sterling pounds. Okay. All right. I'm going to discuss that. Yes, EURGBP. Okay. I was waiting for the first red candle to close here, which of course is going to close today, for those of you who followed the live session as of yesterday. But you can see the red candle went too far. It has eaten more than 50% of that push to the upside. So hitting on my sell button around in here is quite risky. I will be trapped. Again, don't be surprised to see price begin to push to the upside. All right, Okay, Australian dollar against the Canadian dollar trades. Yes, those were nice trades for us. As the Australian dollar trade was a nice trade for us as of yesterday. Land. Okay. Let's look into the next pair. I think I am done with the sterling pounds. Okay, the sterling pounds against the American dollar. This is what is also likely going to happen for tomorrow. In the 4 hours time frame, we have a possible channel. We have discussed this in previous reviews already. This is the proposed lower leg of this channel. So the trend to the downside is not there yet. This is an early channel formation, so we can afford to begin to look for possible price actions around the lower leg of this channel for bounces to the upside. Okay, for bounces to the upside in continuation of this channel move. Don't be surprised to see price get up to that area. All right, so give it some time. We'll be following price here for tomorrow to see what we are going to have, the type of price action we will get here. Okay, the next one and the last one is the American dollar against the Japanese yen. This is the daily time frame. Well, this pair is long-term bearish. Okay, still very bearish. But what is happening right here could give traders the impression that the bulls are about to drive price to the upside. Well, this uptrend here has already given way, so we are now seeing a downtrend. Okay, this is the new swing down, swing up, swing down, swing up. This swing here that is going right here should not take out this previous swing if the downtrend is going to be sustained. That swing should not be taken out by this one that is going here. So that means anywhere around here, not at the very high, should be an optimal zone for price to react up. Okay, to come back down. This is the next level of support here. So this push we are seeing here is something that has been expected. We knew price was going to make that push, but somewhere around in here we are likely going to see a bounce to the downside in the American dollar against Japanese yen. But for now, there is no hint of that bounce, and that is why we are not involved in this trade. If price keeps pushing without any hint and breaks above that high right here, it means we are going to see further upside in this pair. But for now, that high is still intact, still very much intact, and we hope we are going to see some favorable price reaction around this zone for a downward move. I have marked 2 levels between the 111.96 okay level and the 111.60 level. Anywhere between those 2 levels is where I am expecting to see a bounce in this pair, anywhere around here, a bounce to the downside. So for tomorrow, push up again, then somewhere around in here, be very careful going long. From there on, I'm expecting a bounce to the downside. All right, on request, let's see the euro against the sterling pounds. All right, the euro against the sterling pounds, lots of confusion going on in the 1 hour time frame. You can see I have already drawn that channel formation in the 1 hour time frame. That we have a series of warnings that hey, we might be turning to the downside, but that is hesitating just too much. Okay, it is hesitating just too much. Price is also trading around the previous swing high in the daily time frame. That previous swing high right here as resistance. It is also not the best place to go long. We have gotten a series of hesitation candles, small candles, but then pushing to the upside. If you look into the forex currency index, the euro will definitely be stronger than the sterling pound for you to get that little push to the upside here in the daily time frame. So let's see that use here in the daily time frame. You will see that the euro is the daily time frame here. The euro is even 0 here in the daily time frame, but then the sterling pounds is absolutely weak, very weak. Okay. All right, the market has just opened, so we might not really get accurate readings here, but at any rate, the euro is quite stronger than the sterling pounds for now. All right, so price will be trading within this that channel. Within that channel, if you are looking to go short, then you want to wait around this area. But hey, I am not going to be trading this. I'm not going to be trading within here because at some point both the euro and the sterling pounds were strong, and now we are seeing little strength from the euro and weakness from the sterling pound. So this is a confusional pair that you really want to avoid for now. All right, folks, thanks for watching this live session. If you really want to trade forex for a very long time, just like my friend says, it has to be very stress-free. Okay, taking trades that gives you time to think of all the things, not looking at the charts 24/7 and getting stressed out. So that's basically it in the long-term perspective. Other pairs do not have clear directional bias, at least for now. So we'll be talking again hopefully before the London market opens for tomorrow. Thanks and bye-bye.